moi Scott Richard. J'habite ici à Montréal et pendant les dernières 7 ans, j'ai l'honneur d'être le représentant au Québec pour notre bourse, la bourse pour les entrepreneurs. D'abord, on était le CNQ, vous vous souvenez peut-être, et ensuite le CNSX, et maintenant on est...
Enfin!
Et je crois que Richard est maintenant dire qu'on va rester le CSE pour un petit peu de temps. Et vraiment la bourse pour les entrepreneurs. We change our name about as much as some law firms do, right? Chuck, where are you? So we understand entrepreneurs because we are an entrepreneurial company. Back in 2008 when I started with the CSE, the venture index was 3,400 and today it's under 700. That's about an 80% drop. So we as an entrepreneurial company felt the panic, felt the pain, decreasing valuations, tough to raise money, and thank goodness for Richard, really. He pulled us through it in some very tough situations. And the point being is we understand micro-cap companies and we like you guys and we want you to, if you're not already here, come and see us. So in spite of the difficult times, Richard is going to talk to you about the CSE first. We had a record year last year and we've grown in our recognition, and that's one of the reasons we thought it'd be good timing to have our friends from the OTC come up and talk to you. We recently hosted this event in Vancouver. We had over 100 people. It was very well attended. And we're going to do this in Toronto and Calgary as well and have everybody back again. Steve, I know, likes to come to the Grand Prix, not the February weather stuff, but we'll see what we can do. So we want you guys, whether you're CEOs, deal makers, lawyers, anybody in the public markets, to think of us here at the CSE when you're considering doing your IPO, your spin-off, your reverse takeover, whatever it is you're looking at doing. And we want you to succeed, and we want you to have possibly a foothold in the world's largest public market, and it'll just enhance your chances. They're looking at you at a 25% discount right now with the value of the Canadian dollar. So, but you need good people to do this. You need the right people, otherwise you waste a lot of time and a lot of money. And that's why we brought these people here today. So they're going to have a panel discussion about how to do it properly, so that everybody gets a better understanding of what to do. So really, that was the title of our invitation. It's leveraging the CSE to access capital markets and grow your company. And we'd love for you guys, if you're not already here, to come and check us out. So I'm now going to introduce Richard Carlton. He is the CEO, as I mentioned, of the CSE. Been here a few times before. Always great to have Richard back. After that, Steve Jenkins from the OTC will do a presentation, and then Chuck Spector is going to lead the panel discussion with all the colleagues here. They'll be introduced in a few minutes. Just a few housekeeping items. There'll be a Sanka set to follow. Everybody's going to be here. We have some swag for you. Adam Schmidt from Toronto's here somewhere. Great guy. He's always bringing presents for everybody. We have some marketing material, and I think the OTC guys have left stuff. And lastly, just to thank our sponsors, OTC Markets, of course, MNP, BCF, Denton, Canaccord, and Torys for helping out with the event. If you have any questions during the speeches or events, if you wouldn't mind, Camille has a pad. Just write the question down, bring it up so that we don't stop the whole thing. And then at the end, if you still want to stand up and talk, we'll give you some time for questions. So thanks again. Richard, over to you.
Okay, thank you. Thanks, Scott, and thanks to all of you for being with us here this afternoon. I actually didn't know that I was going to be speaking today until some point this morning, and I'm still not entirely sure what's on the presentation that we have. Do I have to actually speak into the microphone, Paul, or anything?
Mike is dead, and now
Okay,
the
well, I mean,
projector bulb just
Oh,
died.
the
so
projector bulb just died. That's excellent. Fantastic.
You're on your own.
Just
Oh,
wing it,
boy.
Richard.
Way to go, technical services here.
Excellent. All right. Well, if it's the presentation I think that it was, it goes something along the following lines. The Canadian Securities Exchange did, in fact, have a record year in 2014. It was the year that, those of us who've been with the organization more or less from its start, we felt like we'd been, rolling the rock up the hill, and it had been, make a little bit of progress, and then it would turn and roll back down over us. We got it over the top last year, and we actually began to grow the momentum of the organization. We listed something like 76 new companies, I think, by the end of the year. About half of them were switches from the venture exchange. I guess I'm not supposed to talk about the competitors, am I, by name? By another exchange group in Canada. And the other half came from companies that were joining us in the public capital markets for the first time. I think all of you know the secret sauce of the organization. We have great people. We have deeply experienced folks on the listing side, average 20 to 25 years in public capital markets in Canada. And the fun part of our organization is we want to solve your problems. That's why we do what we do. We're entrepreneurs ourselves. It's not about, worrying about taking on regulatory risks, or if a company blows up, there's going to be finger pointing afterwards or anything like that. That might happen at another exchange group in Canada. Not with us. We're here to help solve your problems and help you get access to the growth capital that your company needs to be successful. And one of the best things that we did last year, one of the real milestones that we achieved last year, was obtaining recognition from the OTC Markets Group in the United States. So as many of you know, they are the operators of a number of over-the-counter trading facilities in the United States. And, I'm not going to say that it was a short or quick process. We've been asking and banging on their door for a number of years, but eventually they saw the light. And within a relatively short period of time, with a number of our issuers, I think for a period of time last year, we were one of your larger sources of new business. And collectively, we understand the power of the proposition that we bring to the table. Because Canadian public companies who are well regulated, we obviously have securities commissions that whose procedures and processes are respected by their colleagues around the world. I'm going to say something nice about IROC, and that's going to be the only time all night that I'll say something about IROC, but their regulation of the markets are, again, respected by their colleagues around the world. So the companies from Canada travel well outside of the country. And so in working with OTC markets, it meant that our companies basically pass muster. They're heavily regulated companies that are given prompt and ready and inexpensive access to the U.S. capital markets. So for us, it meant that through a listing on us, companies could not only get access to investors in the secondary markets in Canada, but also in the United States as well, by stepping up and working with the folks at OTC Markets Group. Oh yes, this is the other first for me. Je vais donner les présentations en français. No, I'm not. But I am giving a French presentation. Not bad, eh? So anyway, I'm not going to go through all of the statistics, but we hear things as again we continue to roll that rock up the hill, even if it's getting a little lighter and a little easier. It's tough. I can't raise money on the CSE. Well, actually, a lot of people do raise money on the CSE. And last year we had, 211 financings were completed, totaling $155 million. Double what companies had raised in 2013. And about half of it was in the technology sector. You'll notice here that there's no medical marijuana sector. There's no such thing as a medical marijuana sector. There's agriculture, life sciences, biotech, but there's no such thing as a medical marijuana sector. Just want you to remember that. Thanks. Hit me again, Paul. Okay, so this is actually one of the greatest weeks in the history of the Canadian Securities Exchange, by the way. One of the other complaints that we've heard from the people who don't know us so well is the difficulty of retail investor access to the marketplace. Everybody knows there have been a couple of very prominent holdouts who have not provided access to the Canadian Securities Exchange. TD Waterhouse and BMO Capital Markets. As of today, both are connected. And so we managed to get them in just before PDAC. This is huge for us because, I mean, pretty clearly, you know, TD is about 40%, I think, of the assets under administration in the discount space in Canada. You know, it's obviously been a source of irritation to their customers and to our issuers, quite frankly, that customers would have to phone their orders in, you know, over the help desk. And sometimes they would try to charge them a high-touch commission and all of that stuff. In any event, fully connected. I'm sorry to say that the sole remaining holdout in Canada of the discount brokerage network is in fact DisNet. We met with some of the folks earlier today. They have some technology challenges that they're working through, but we have a commitment that, you know, they're going to get there. So with that, as I say, we've already seen a bump in the last week from I think the TD activity. And I think that's going to just work really well for everybody. That's phenomenal. The other thing that isn't, oh yes, Yahoo Finance, we will be live very shortly, probably within a week or two, with real-time quotes and full coverage for all of our issuers on the Yahoo Finance portal, which is also another huge milestone for us. Oh, you guys know all this stuff. It's, you know, when you're an issuer on the Canadian Securities Exchange, you are regulated on the same basis as a public company on any other exchange in Canada. How's that? Yeah. You didn't mention the other guys. Yeah, there you go. It's all the same. Good. Paul? Yeah, basically the next couple of slides, which we'll just sort of kick over, and we talked about, you know, the secret sauce. And people, yes. The other is the philosophical difference, and that is we have to take care of the regulatory risk. You know, we have to do the background checks. We want to look at the financial structure. You know, we want to look at the audits and all of that stuff. What we won't do is second guess your business acumen and your business judgment. And because clearly, you know, we're not smart enough to do that. You know, that is the role of the secondary markets, to price business risk. We can't address business risk. We can address the regulatory risk, and that is where we focus our efforts. What that translates into, obviously, is a substantially faster time to market and significantly cheaper road to public capital, taking that approach. Keep going. Yep, keep going. Keep going. There we go. So, and I did talk a little bit about the, you know, the relationship with the OTC markets. You actually have, if my math is correct, I think it's 105 of the issuers. So about half of our issuers have stepped up to work with the OTC markets to obtain the quotation in the U.S. We'd like to see more. We think it's a phenomenal vehicle for the issuers, and I think some of the panelists are going to talk about it because, again, when the companies get down there, you know, market makers, you know, Pat is going to talk about what he does by way of calling a continuous two-sided market in a, I have to say, surprising size.
For a little guy, yeah.
I would say, like, I'm going to go there? No way. But in any event, there is, in fact, a tremendous amount of liquidity available for Canadian issuers, particularly as they move up the food chain here. We'd like to see of these companies more of the CLE and the PINKs move into the QB and the QX, because when you're up there, you also have access via the Scottrades, Fidelities, Ameritrades, and so on through the U.S. discount broker channel. Obviously, hugely beneficial. So again, in time for PDAC, we are launching an index this week. So the last few weeks we've been working on a representative index, and I have to tell you, one of my favorite jobs that I had in my whole life. I was working for another exchange group in the last century, and I had the privilege of leading the team that rebuilt the indices at the other exchange group, the 60 index and the composite index, and the relationship that we developed with Standard & Poor's. It's really fun to build index products. So we've been going through the same exercise with our issuers over the last few weeks. The idea is that we will start with a composite index, which will launch on Thursday at a level of 1,000. So we'll be higher than the. We figured putting it at basing it at 10,000 might be a little cheeky, but 100 definitely, not the right number. In any event, there is some correlation. We've done history for the last 2 years, synthetic history, obviously. Some correlation with the venture, but oh, sorry, I said it again. But there are important differences in the performance of the index, and it in fact has performed better, which is kind of like saying it was didn't do as bad, but But it's something that we're looking to help provide some exposure to our companies with greater than 5 million market cap. And we've been approached by some folks that think they might want to run some product off of it. So, as I say, watch this space. It's also we'll be able to squeeze it into the newspapers, which a couple of our members of our board believe is very important. And as I say, we launch on Thursday. Those of you who are Bloomberg customers, it's actually already up today, in test mode. I also skipped over some of the other things, but and Adam can talk to you about this at length if you'd like. We're initiating a market making program. So we'd like to have all of our issues with a formal market maker responsible for a continuous two-sided quote. We have new technology which enables the market maker to provide automated execution of eligible retail orders up to a specific size. They will also do automated execution of odd lots at the NBBO. Kind of inside baseball for many of you, I guess, but a real headache for the folks that are running trading desks dealing with the odd lots. So we are in the process of recruiting market makers for our issues. We also have the ability to provide similar facilities for stocks that are listed on other Canadian exchanges. And that's something that's in process right now. We're also going to be launching additional order routing and risk management tools for our dealer partners. And again, we're really in the next sort of few weeks, we'll start to see the fruits of our labor there. And what else? Say so. Again, if you have any questions, I will be here till set, I guess. And obviously delighted to talk about the Canadian Securities Exchange at any time. Thank you very much, Scott and everybody. Look forward to hearing from the panel. Thank you.
Thank you. Sorry for those technical problems, everybody. It's such a pain, but we really did try and get those things worked out earlier. And I did want to mention before that Richard had worked for the other exchange, and we internally call that working for the dark side. And we're very pleased to have him. And I do say this sincerely. He's got us out of a lot of jams and has done an excellent job, and hopefully will continue to keep us moving forward. Stephen Jenkins has been sitting there very quietly, and we look forward to having him. He is the Assistant Vice President of the Capital Markets Group, OTC Capital Markets Group from New York. He also spoke in Vancouver. Really glad he was part of the initiative to get this event happening here in Montreal. Thanks again. Come on up, Steve.
Thanks, Scott.
Yeah, he's got his slides.
So I'm going to try to keep my piece as short as possible. I want to give you a general overview of what we're all about, an idea of, I'll give you a little bit of time, of the initiatives that we have been working on specifically with the Canadian Securities Exchange. Again, I won't get into too much detail. you're welcome to ask questions afterwards, but I think most of the questions can be directed towards the panel, and like Richard, I'll be available after the event to answer any specific questions.
I don't think you have a slide presentation.
Slides?
Sorry, Richard had it back.
Yeah, sorry about that, guys.
Okay.
It
I'll
says
just
right
start.
here, OTC
I
Montreal.
haven't pulled up as well.
Hopefully you know what you do.
Okay.
It's a CSE presentation.
So just by way of background, I manage the Canadian market. I've been working with OTC markets about 3 years. I came on working as an analyst and have since taken over this line of business. We have about 200 Canadian companies that trade with us, either on our OTCQX or OTCQB marketplace. And basically what brings us to Canada is educating lawyers, educating companies, educating accountants, deal makers, CEOs, CFOs, IROs of companies on our marketplaces. The differences between our highest marketplace, which is OTCQX, and our new middle marketplace, which is OTCQB, and how that differentiates from an unverified marketplace, which is OTC Pink, how different brokers and investors will place added compliance constraints on those OTC Pink and gray market companies. So that's the objective of what we want to accomplish today. We operate 3 different business lines. There's the trading services, there's a market data, and then there's the corporate services business. And it's set up in a cycle such that any enhancement to one of the lines of business enhances another. So for example, if we increase the transparency for the broker-dealers, that'll make it easier for them to trade using their own systems, which then makes it easier for companies to access a larger pool of investors and provide more liquidity for their shareholders. With OTCQX, our focus is on providing an exchange-like experience. So providing all the trust, all the transparency, and all the trading that a company, an international company in particular, would experience on the New York Stock Exchange or on NASDAQ, but doing so without requiring the companies to be SEC reporting, Sarbanes-Oxley compliant, and take on a whole new set of corporate governance practices. So in relation to what Richard was covering, we qualify the exchange itself. So as long as a company is in good standing with their exchange, then they can easily come into the U.S. through one of our marketplaces. By doing that, it makes it easier for companies to quickly access U.S. investors and for U.S. investors to easily navigate the OTC space, of which we trade 10,000 securities that range from Bombardier and a Canadian oil sands, a Roche and Adidas, all the way down to your typical penny stock, companies trading at fractions of pennies. And then we have 3 different marketplaces, because obviously a company that's trading at fractions of a penny isn't necessarily a good investment, especially for a retail investor. So we put those types of companies on our lowest marketplace, and then in order to move up, as Richard was explaining, which is what we encourage, as long as the companies can do so, they have to meet certain standards. So we created OTCQX in 2007. It's been a success. Some of the largest companies in the world trade on OTCQX. But over the years, we've been increasing the standards. Originally, it was designed to satisfy blue sky laws, and more recently, we increased the standards to also require the companies to not be penny stocks. And in doing so, we created a larger gap between OTCQX and the bottom marketplace. So when we created OTCQB, which was really to provide a venture stage marketplace in the U.S., we added the international element, so companies that are listed on the Canadian Securities Exchange, once we qualified the CSE, could easily access U.S. investors. One piece about OTCQX, so we're not just about retaining companies and never having them graduate up to NASDAQ or New York Stock Exchange. NASDAQ and NYSE are where the companies are going to get the most trading, the most trust, and the most transparency. What we serve for, this is an example of 10 or 12 Canadian-based companies that have utilized OTCQX as a way to get to NASDAQ and to New York Stock Exchange. So we encourage that just the same. OTCQB, we mentioned a lot of these things. Like I said, there's a minimum standards that companies have to meet in order to join OTCQB. They have to be trading above a penny. They have to be on a qualified foreign stock exchange. They have to have what's called a DAD PAL, provide a letter of introduction verifying that they can indeed access U.S. capital as a foreign private issuer and they're exempt from SEC reporting. We'll cover more of that on the panel afterwards. QB's been a great success since we've launched it. So over 500 companies have joined, over 700 companies have been applying, and we're getting hundreds more every month. So it's been exciting not only for us as the marketplace, but also for all the companies that have been joining. Like the CSE, we've been launching indices. We have an OTCQX composite. We have an OTCQB composite. We're getting very index happy at OTC markets, which is fun. It's definitely an exciting time. We can go to the next slide. And just a little bit of background on what we looked to do when creating QB. We were focused on what worries investors for small cap companies. So I would imagine a lot of people in the room are familiar with the OTC bulletin board. Some people still think that that's where their company trades. And in fact, that's changed over the last couple of years. With the OTC bulletin board being a telephone-based market, a lot of the broker-dealers, Pat can speak to this, would switch over and solely trade on our trading platform, which is called OTC Link, which is an SEC-registered alternative trading system, also regulated by FINRA. So when we ultimately took over all of the trading for any formerly deemed OTC BB company, we had to add additional standards because despite being SEC reporting, there was low management transparency, there could be bad boys affiliates on the companies, they were distressed companies, they were bankrupt companies. It was basically 3,000 companies that were unverified by the SEC, and the SEC actually put a disclaimer out saying, we don't verify the information on these companies. This is something that investors have to do. So in creating OTCQB, we decided we would do this. We would do these background checks. If they're listed on the CSE, it makes it a lot easier for us because we've qualified them. Next slide, please. Just a little bit of background on the U.S. opportunity. I don't need to go into too much detail, but obviously there are a lot of investors there. With half of the world's assets under management, 2/3 of the hedge funds existing in the U.S., it's definitely a place where any international company, once they succeed in their home market, it's the next step. And fortunately, Canada, being so close to the U.S., Canadian companies become good partners with us in Canadian exchanges in the same respect. So just a little bit of background, 5,500 investment managers, 600,000 registered reps. There are a lot of people who are talking up OTC traded securities, and a lot of what we do is enable them to do that as well. Next slide. So really quick, 4 steps to accessing U.S. investors. First step is to trade on a U.S. marketplace, have a broker-dealer actively quoting you both on the bid and the ask so that investors can see the prices, and then trade on a marketplace that provides the ample amounts of liquidity and transparency. So it doesn't necessarily have to be OTCQX. It can be OTCQB. It could even be OTC Pink if that's what the company has deemed to be the best marketplace for them. But with a little bit of research, they'll often find that investors want the company to be verified, and investors want to be able to speak with their securities rep about the stock. So that's why you see a lot of companies upgrading to OTCQB and to OTCQX if they can. The second step is related to OTCQB in particular. It's enhancing the information and trading experience for investors and for brokers. The third, also related to the premium marketplaces, removing the barriers, penny stocks. I mentioned that as the second reiteration of OTCQX, foreign private issuer verification. That happens both on OTCQB and on QX and also blue sky laws, which is QX required and QB recommended. And then the last, which is the most fun part, is selling the stories into the US, speaking with institutions, speaking with retail, and explaining to the buy side why your story is one that's going to continue to grow. Next slide, please. So any added compliance with New York and NASDAQ, as I mentioned in the earlier today, it's going to be the place that offers the most transparency. It's going to be the best place for a company once they continue to grow as a small cap into the mid cap range. But it will require Sarbanes-Oxley, U.S. GAAP, SEC. So for a lot of Canadian companies, they don't want to have to put up with that at this point in their developments. And if you hit a certain threshold, then you don't need to undergo all those added verifications or take on a brand that isn't your own. With OTCQX, we have companies integrate their CEDAR filings. So as long as they have 2 years of their past financials and material news into the U.S., then they'll be able to qualify. And they also have to retain a principal American liaison, which is either an investment bank or it's an attorney that verifies your company in the U.S. and also verifies that foreign private issuer status. With OTCQB, similar to OTCQX, only you don't have to retain a principal American liaison. This is one of my last slides. I have about 2 more minutes and then I want to wrap it up. But just real quick, a step-by-step, select the U.S. marketplace, select the principal American liaison that you want to work with, submit an application. With OTCQX, there's a little added paperwork. There's an agreement and there's an appointment of the principal American liaison. You upload your material news, you undergo a review with us and with your principal American liaison, and then you receive preliminary approval, and then you join the marketplace. It takes, if you're a pink company, it can take less than a month. If you're a gray market company, it requires a 211. It takes about a month to 3 months. It really depends on how long it takes you to get the Form 211 cleared and which principal American liaison you're working with. And this is my last slide, which is what I'd like to leave you with is both marketplace and engagement are required in order to create trade in the U.S. It's not just enough to list on a stock exchange. You have to work the market, and at the same time, you can't just work the market. You need to have a marketplace for investors to go to. So with OTCQX and with OTCQB, we're looking to create a good balance between providing a strong marketplace, but not overburdening CEOs, CFOs, IROs on any duplicative reporting and such, letting them focus on the fun part of their business, which is engaging with investors and growing their story. Next slide, please. And that's it. So this is my information. I'll be available after if you want to ask me any questions, and thank you for the opportunity to present today.
Thanks, Scott. Good news is I don't have any slides. Yeah. Chuck Spector, I'm the senior partner at Denton's in Montreal for securities M&A work. I've been there for 23 years. We are now officially the largest firm globally. We just announced a combination with 4,000 Chinese lawyers, and really we're 6,500 lawyers, and we cover pretty much every part of the globe. Rick, you like that, don't you? And not all of them are going to bill you at the same time.
I know everybody's name, I hope, Chuck.
I know them all. Anyways, I'm not going to take too much time in introducing everybody. I really like if everybody introduced themselves. So starting with Murad, just give us a 30-second pitch on who you are and what you do.
Murad Bimani. I'm a public companies partner in our Toronto office. I have some of my colleagues from the Montreal office here, so happy to see them. We are the 5th largest firm in Canada, MNP, the largest firm that focuses predominantly on mid-market, and we do about 350 reporting issuers across the country. Close to 25 or 30 of them are cross-listed company on the OTC, and we're always looking to help companies that are looking for ways to grow their footprint, whether it makes business strategic sense from an acquisition perspective or financing perspective. So we've really seen a lot of this stuff, and happy to share some of our experiences with everyone.
Thanks.
Yeah, hi, I'm Andy Beck. I'm the co-head of the Torrey's Corporate and Capital Markets Group. I'm based in New York. I'm a U.S. lawyer. The Torrey's New York office practices, the U.S. lawyers practicing U.S. law. A substantial portion of my practice involves cross-listed companies, cross-border transactions. And we basically, that's really our sweet spot, is helping, dealing with Canadian companies that want to raise capital in the United States, want to list in the United States, want to engage in transactions in the United States, and that's really where most of our practice is focused.
Thank you. How you doing? My name's Patrick McAvoy. Bonsoir. I'm from New York City. I work for Canaccord Genuity there. I work on a global trading desk. So we focus our time 24 hours a day trading about 45 or 50 international markets. We obviously have a big footprint in Canada, as many of you know, on the investment banking side, on the advisory side, on the market making side. In particular, my team focuses on many of the small microcap companies which trade in the U.S., so I can appreciate where many of the issuers here are today. And we also trade a lot of F shares and ADRs, so we are very familiar with cross-border trading and the intricacies of being listed in the United States and Canada or elsewhere. So happy to be here today.
Hi, Jason Paltrowitz, Executive Vice President, Global Head of Business Development for OTC Markets, working with Steve. Most of my career was actually spent on cross-border listings, foreign private issuers accessing the U.S. Was actually working for another firm when I met our CEO, and worked on and created OTCQX with the belief that foreign private issuers didn't need to have duplicative reporting standards in order to engage U.S. investors in kind of that post-Sarbanes-Oxley world in the U.S. So I was on the board of OTC for a while and joined about a year and a half ago to run our corporate services business, which, as Steve said, has grown in leaps and bounds last year with the creation of OTCQB. Another 700 plus companies that are now listing on our market. So happy to answer any questions about our market, cross-border trading, and listings.
So my name's Adam Aluba. I'm a senior associate with the law firm of BCF here in Montreal. I think I had the shortest distance to come to get here of the panelists. I don't know what that says about me. So I focus mostly on public companies reporting issuers. We are focused mainly on the small and medium-sized business sector and all kinds of different industries. So whether it's mining, industrial, technology, retail, you name it. And the gamut of our experience ranges from private placements to initial public offerings, reverse takeovers, listings, cross-border listings, all the needs of a public company. So glad to be here.
Okay, thank you for your presentations in terms of what you're doing. Now I guess we have to get to the meat of the order, which will be questions I'd like to address to Jason right away. Stephen already touched a little bit on the length of the process that issuers will have to go through. What does this cost from beginning to end?
Cost, or as we like to call it, an investment. Much like the CSE, we think a little bit differently about listings and what companies should have to think about. So we have a pretty easy cost structure. Clearly, there's a cost. QX is our best market, as we say, is the higher cost market. It's a $15,000 annual fee. OTCQB is a $10,000 annual fee, and those fees are irrespective of the number of shares that are trading or anything else. So it's a flat fee, and we try to keep it simple. The initial application process has an application fee, one time $5,000 for QX, $2,500 for QB. QX, if you join midway through the year, those fees are prorated. So we prorate you depending on when you join, and then you're billed the end of every year, whereas QB is just a rolling billing cycle, so we don't prorate.
And do those fees cover additional issuances throughout the year?
Yeah, it's a flat fee, irrespective of the number of shares in issue, the number of shares you do issue, or anything else that you might do during the year. So that covers everything.
Thank you.
Good idea.
Very good. That's a small irritant for a lot of issuers. I think one of the challenges for Canadian companies or any company that's looking to go into the US is the concerns about the regulatory, overwhelming regulatory purview of the SEC. Andrew, could you just give us a brief view of what type of regulations would apply for, let's say, a Canadian issuer who's now going to be interlisted on the OTC?
Well, that's frankly one of the real advantages with listing on the with listing on the OTC is that you don't have to become a reporting issuer in the United States. You don't have to register with the SEC, as long as you maintain what's called the 12G32B exemption. You don't have to become a reporting company in the United States. You don't have to comply with Sarbanes-Oxley. And you have a 12G32B exemption basically as long as you make certain documents publicly available, which as a Canadian, if you're a public company in Canada and you're on an exchange like the CSE, those are the documents, the financial statements, the other documents that you would normally file on CDAR. So the only way you would lose that, assuming you don't do something like have a public offering in the United States or go to list on a national securities exchange like NASDAQ or the New York Stock Exchange, the only way you would lose that is if more than 45% of your trading occurred in the United States, or if the U.S. market became your largest trading market. But assuming that doesn't happen, then you will have this 12G32B exemption, and you won't be subject to any SEC reporting obligations.
And Andy, that'll apply even if you have exceeded a threshold in terms of U.S. holders besides percentage, but is there not a fixed number that you go over that you become?
No, the general rule is you have to register in the United States if you have more than 2,000 holders, or more than record holders, or more than 500 non-accredited record holders. And that's the general rule. There are two exceptions. One of them for non-U.S. companies if you have fewer than 300 beneficial holders in the United States, which is a very hard thing to monitor. The other, which is this 12G32B exemption, which says even though you go over those thresholds and even though you'd otherwise have to register, you don't, as long as you provide this information through a website such as CDAR, and you have no more than 45% of your trade in the United States. So it doesn't matter how many shareholders you have in the United States, you never would trip that threshold required to report as long as you have the 12G32B exemption, which you need to trade on the OTC.
Thank you, that's very helpful. Adam, I'll ask you the question. Companies going public and the listing process in Canada. Give us a brief overview of how that works and the different types of going public transactions that you'll see.
So there are mainly two ways to, I mean, they're oversimplifying, but I'll call them two different ways to go public in Canada. So the first one is the traditional IPO that we're all more or less familiar with. You have a company, it's got a good story, you decide that it's time to go public, and you prepare a prospectus. It has audited financial statements attached to it, and you do what's called a preliminary prospectus at first, which is like a draft. You submit that, file it with the securities commissions. They will give you comments. You will do the final prospectus, and then you will go to market. You will do your offering and list on the exchange. So that's sort of the clean and traditional way to do it. Some of the challenges, though, and the main challenge, actually, the one that I've seen, is to meet the public shareholding requirements that any exchange will require, whether it's the CSE or another Canadian exchange. You have to have a certain number of public shareholders. You have to have a certain number of shares held by the public. Those have to represent a certain percentage of your shares, total shares, and that all depends on the exchange and tiers and so on. But the point is, it's not easy to get there. The other way of doing this that is attractive, if you can find a suitable vehicle, is what's called the reverse takeover. So you find a shell that's already listed on the exchange, whichever exchange it happens to be, and they buy you, except the currency they use is their shares, and they issue so many of their shares to you, the owner of the company that wants to go public,
that you end up controlling them. And the advantage there is that hopefully, I mean, you have to choose properly or that doesn't work, but they already have these public shareholders, the public float requirements, they meet all the thresholds. Things haven't gone well, and they're, you know, they're at the end of their business line. The other advantage is that you don't have to go through this process of having a preliminary prospectus and a final prospectus. You'll typically have a shareholder meeting, you'll get that approved, and off you go. The disadvantage is that you're taking on the company and all of its history. So if there are skeletons in the closet, if there is litigation, there are problems with the financial statements, maybe things have not been going well for so long that there's a cease trade order that's out against them, you've got to get that cleared up. So it comes with baggage. So, you know, two different ways, advantages, disadvantages.
Thank you. Patrick, when we hear about the going public process, at least from the legal side of things, we also hear other things like market makers, and do you need to have professional traders who get involved in security? Could you give us a little bit of a flavor on the importance of a market maker and how it would work with OTC companies?
Yeah, sure. I don't know how familiar people are with the United States and how the over-the-counter market works, but it's a bit of a throwback to NASDAQ before, you know, the SelectNet days, if you will. So you have, for the most part, human beings at different broker-dealers that are legitimately standing up to a bid and an offer of a certain size based on the price of the stock. So it's really using a sort of old school methodology that works incredibly well in a marketplace where you can have significant instances of lack of liquidity. Especially in the newer issues. So, you know, what we do is we stand ready to buy and sell securities no matter what the price is at any time, and we stand up to our quotes in order to create a more efficient marketplace for you guys, for you issuers. So, you know, when you initially come to the United States, it's you know, there's a lot of law work behind it, but you need to file a 15C211 if you want to be listed on the OTC markets. Otherwise, you would be gray, which means you sort of trade in outer space, right? It literally does, though. That's what it means. I mean, if you want to trade it, it's old school. You call 3 market makers, you get a quote, and then a customer's filled based on the prices that he's getting over the phone. I mean, this is like boiler room stuff. So, what these guys have done a great job is they've encouraged companies to pull themselves out of the gray and onto the OTC QB, OTC Pink, or OTC QX. And, you know, one thing that I talk to people a lot about, especially issuers, you know, at events like this or when people, investment banking clients, is, you know, the greatest thing you can do to provide a more liquid security for investors is to be transparent. So the best way to be transparent is to be, of course, OTC QX. Granted, it's a little bit more of an investment, as Jason said, but clients and potential investors want to see that you're willing to take every step that you can to be truthful and honest and putting out everything that you can. So, you know, they kind of go hand in hand. I would look at it, as Jason said, as an investment, as a market maker, and I really have no skin in that game other than I would like to see, you know, your stocks have more volume so that you have happier investors.
Yeah, I would just say, to cut in, definitionally, there's some confusion with gray market. So you're actually not on an OTC markets market if you're gray. So with respect to a market maker, it's the second that 211 gets filed and there's a market maker that's putting up a public bid ask, that's kind of when you're elevated or you've graduated to one of our markets, which starts as pink. So one of the fundamental requirements of QB or QX is that you have a market maker. It's getting that market maker that gets you from gray to pink initially. If you're in the gray market, you're not on an OTC markets market. You're kind of in outer space.
Yeah, and technically you don't, if your stock trades gray, you don't, there's no market makers. So FINRA has told us there's no stock that trades gray market has market makers. So one significant disadvantage that is for the issuer is that as a market maker, I can't sell stock to a customer short. So even if a customer comes in and says, I would like to buy 50,000 shares of ABCD ABCDF, the F share, and if I don't have inventory or the other side of that order, I can't even facilitate it. So you can't even, and that's what happens a lot in the over-the-counter market. There's proprietary trading, there's pro trading, as you call it up here. So it's important, it's vitally important to be on one of OTC markets exchanges.
Brad, Canadian issuers who are going to find themselves listed or interlisted with another exchange. What are some of the accounting requirements, whether it's IFRS or other US GAAP issues?
So the ideal scenario is where a company that is a Canadian listed company and sees a strategic need or an opportunity to cross-list down in the US. It's important that you know the rules, as it was mentioned earlier, that you have to qualify as a foreign private issuer, and your foreign exchange is a recognized exchange. The setup at OTC is great because they would accept the CDR filing directly. So there is no requirement to do a reconciliation into US GAAP as it used to be the case a few years ago. So it's important that we know what the obligations are, and at the same time don't let the filing requirements come in the way of you driving the business. If you happen to list on OTC directly as your primary exchange, then you have to follow the US GAAP rules and make sure that you have the right people around to help you get the books done as well as the audit done, and you have an accounting firm that is actually PCOB registered that can sign off on the audit report. So it's important to know the rules of the game and work with the service providers who've done it before.
Thank you. Jason, what are the important things to consider when an issuer enters a new market like the U.S. through OTC, one of the OTC facilities?
Well, I think Steve kind of said it best, right? You can't just kind of, list on an exchange and cross your fingers and hope everything's going to work out, right? You can't expect to see something simply because you've done a cross listing in the U.S. So you have to be prepared as a company, and you have to have a serious think, either with your management team or your board, as to what you're actually trying to achieve. And those are the things you need to think about, right? Are you trying to gain U.S. investors? Are you trying to increase your credibility? Are you trying to be a good public company? Do you hope to one day graduate to an exchange? What is it that cross-listing, why are you doing it? And if you can't answer that question, then probably you shouldn't do it. And you shouldn't do it and expect like a lot of things are going to happen just because you did it. And so I think for us, it's know what your strategy is, know what you're hoping to achieve, use a cross-listing in the U.S. as a way to get to that goal, but you really have to be thoughtful about it, and you have to execute on what that goal and what that strategy is. And a cross-listing in the U.S. can be a great way to kind of propel you forward. But it's not, it's not the end of the road when you do it, it's actually the beginning of the road, and you have to kind of understand that and be prepared to take that journey, and to work with that listing and to promote it, to get the benefits, which is going to be the liquidity, which is going to be the U.S. investor base, which is going to be hopefully growth in your market cap and growth in your company strategy.
Patrick, are you able to give us an overview of how the clearing works between the two borders, or between the borders between Canada and the United States?
Sure, and Jason's great to jump in on this too as well. But so F shares in the United States would essentially mimic a Canadian symbol listed here, hopefully on the CSE. They share the same ISIN numbers. They're completely fungible cross-border. So if I buy 10,000 shares of ABCDF in the United States, I can immediately turn it around and sell it ABC listed on the CSE, and there would be some cost associated for the broker-dealer trading it, but as an issuer, not any cost to them,
No.
right? So, obviously your stock has to be DTC eligible, which is important to think about. I'm sure the law firm would be on top of that. And, anything else to add there?
Yeah, Canada is one of those markets which is great because, you know, our CSDs talk to each other and the shares could just move back and forth. So if you look at other marketplaces that require the use of something like an ADR, because they don't have that linkage, it becomes a little bit more of an issue. You have to get a depository bank involved. When you get a depository bank involved, there's usually more fees for your investors because the DR banks charge fees for that. With Canada, it's relatively simple. The securities move, it's almost transparent to everybody that the securities are moving cross-border. What it does do, though, is because you can do that, what some Canadian companies, you know, they look at the U.S. liquidity and they say, well, the liquidity in the U.S. isn't that great, so why am I doing this? Because it's so easy to move back and forth, what you'll find is that U.S. ticker, that F ticker, is what's attracting the order flow, but the order actually then gets routed back into the Canadian market. So you got to be a little thoughtful as well when you're looking at the liquidity of your Canadian listing and your U.S. listing, because that fungibility moves so well. You might actually be getting a lot of activity out of the U.S. with that U.S. ticker, but seeing that resulting as trading up here as those orders get routed up here.
That's actually a great point. So just to expand on that a little bit, so if you have a customer at TD enter an order in ABCDF, just because it traded 100,000 shares in ABC on the CSE and only 3,000 shares on the day in the F share in the United States, there could have been quite a significant portion because we have to offer our clients best execution. So if the price is better in Canada, which many times it might be, we will go to Canada and trade the stock there for the client. So it may print in Canada, it may print in the United States, so it can be a little bit misleading, you know, and just by looking at the numbers. But, you know, a lot of guys would ask when in Vancouver, they were worried about arbitrage opportunities and market makers exploiting, you know, vast price discrepancies. That just really doesn't exist anymore. Typically speaking, the U.S. market will trade some nominal amount wider than the Canadian market, but from time to time, because of customer orders being represented, the price is better in the United States. So if I get an order at Canaccord, I guarantee my client that I'm buying it at the better price, whether it's U.S. or Canada, and then filling it back to him in U.S. dollars or Canadian dollars, whichever he wants. I take the currency risk on that, which as of late has been more significant, as everybody knows. But you know, it really is. It turned into a super efficient marketplace, which is just great news for you guys.
Great, thank you. Murat, I'll ask you first. Principal risks associated with interlisting.
I guess I'll echo what was said earlier, is that the company really has to have a business and strategic purpose to be interlisted. And like it was said, it's not about listing and hoping for the best. There has to be a story that needs to be told. You have to engage. And part of the engagement is reporting financial results on a quarterly basis and annually. And that's where it's important that having a good working relationship with your auditor to make sure that if you're making a major transaction during the course of the year, are actually looked at and reported properly during the quarter, so then come year end, you're not making a major change to how you reported something previously. So aligning the financial results to the story and then use the historical data to tell the story going forward is key, and that's all part of the engagement. So I would say there is a risk, but good organizations look at them as opportunity.
Andrew, I'm going to ask you the same question from your perspective in the U.S. Canadian company that interlists in the United States. What would be the bigger risks?
Well, I know that a lot of companies that look at the U.S. market, one of the things they're concerned about is people in the U.S. are seen as more litigious.
Understatement.
So I think that probably gives some companies pause before coming down to the U.S. markets, because they may be concerned that by doing that they're going to subject themselves to a greater risk of litigation, and there is some chance of that. I wouldn't say that where there's smoke there's fire, but a company that does its disclosure properly and trades and is transparent and everything, there really shouldn't be. They should be fine. So I think that's probably perceived as one of the bigger risks.
And Adam, from a Canadian perspective, anything that comes to mind in terms of enhanced risks?
Yeah, the main thing for me would be to make sure that you're comfortable with what you're getting yourself into in the United States. That you've really thought about the various exemptions that are available, and you talked about the foreign private issuer exemption. You've consulted U.S. counsel, and you haven't just jumped into a new market because it looks fun and it looks exciting, and there may even be a great reason to do it, but you want to make sure that you're doing it by the book. And especially for small, medium cap businesses, a lot of times the reflex is to try and save a few dollars here and there, and okay, U.S. lawyers, they're expensive. Why don't we worry about that later? And then you don't consult them until the horse has already left the barn, and you realize that you're now subject to all kinds of U.S. requirements that you didn't have to be if you'd done it, quote unquote, properly.
Yeah, just as Andrew was saying, if you're doing what you're supposed to be doing in Canada and you mimic that in the United States and you follow what these guys tell you to do, you're not going to have an issue. I mean, I'm just trying to think off the top of my head, because we trade a lot of bankruptcies and we trade a lot of delists, and I've traded situations where things are halted in Canada and not in the United States, and they're getting more on the same page finally about that, which is nice. But Sinoforce comes to mind. Probably a lot of people remember that name, right? We own 80 trillion hectares of forest in China. Then an investigator goes over and says, "Who owns this plot of land?" And they said, "The Chinese government." He said, "Not Sinoforest?" And the guy goes, "Who's Sinoforest?" And so it gets halted in Canada, but still trades as an F share in the United States, which was actually a great thing that FINRA and IROC weren't on the same page, because it gave people an opportunity to take advantage of that liquidity in a very tumultuous time. But I mean, those are the type of situations that come to mind of companies that encounter issues in the United States and end up facing significant litigation, rightfully so. Not your everyday company that's operating in both markets.
Yeah, if you commit fraud, chances are you're going to have a problem, irrespective of where you're listed or anything else. So.
And Jason, biggest advantage? What would you say the biggest advantage for Canadian companies going down to list in the U.S.?
The cool hats that we get out of it.
Yeah, great market makers, cool hats.
Great market makers,
yeah.
Cool hats, good. No, the biggest advantage is from a company perspective, and Steve said it, right? I mean, the U.S. is still the largest investor market, and it probably will be for the foreseeable future, right? And so, especially in Canada, especially with entrepreneurial companies, especially with resource companies, oil and gas companies, mining and mineral companies, the U.S. has developed an investor infrastructure that understands it, that loves it, that is engaged in it. And so, and even outside of those sectors, the U.S. likes entrepreneurial companies. There are any number of investors that are looking for those opportunities that aren't risk adverse. And so there's a lot of, there's a lot of money to be had. There's a lot of new investors to be had. There's a lot of your story to be told to people that understand it. And so as you're building your business, there's an advantage. I'll say the second advantage is a rule that hasn't yet worked its way through the U.S., something called Reg A+, which for companies looking to raise capital, follow that, because the SEC is looking through the Jobs Act to increase to $50 million the amount that a company can raise without having to go through all the, long story short, the rigmarole of SEC filing. That would apply to Canadian companies as well, not to other jurisdictions. So Canadian companies that are looking to raise capital in the U.S., should Reg A+ pass on the Jobs Act, can now come down to the U.S., can now raise $50 million in an unregistered offering, and then have a secondary market for those shares to trade, right? So immediately liquidity on a secondary market would be an advantage as well.
And all we have to do is get the Canadian authorities on side, and it'll work really nicely. I don't have any other questions. I think I've exhausted the list that I had prepared, but really, I'd like to welcome some questions from the audience, please.
Concerning the market making in the U.S., your pool of market makers come from where?
That for us or for him?
Yeah.
That would be from the U.S. side.
We're both.
And also from the Canadian side, what's the correlation between the two? If the market maker in the US is it unique to the company from the beginning and they stay with them, or can anybody trade the stock at any time?
Right. So okay. So any registered broker dealer can choose to make a market in an over-the-counter stock. We, as broker dealers, as market makers, pay a minimal fee to be a market maker in a security, and those market makers may or may not have a desk simultaneously in Canada. However, for the most part, the market makers that are the busiest and put up the most volume, even if they don't have a desk like we do at Canaccord, they would probably have an agreement with another broker dealer in Canada so that they could offer that same best execution to their clients, as I talked about before, making sure the client gets the best price, whether it's in the United States or whether it's in Canada.
So in the US, there's a prohibition against paying a market maker to make markets.
Right.
I think that's important if you don't know that. So really a market maker makes a market on their own volition because they think there's an opportunity to make money. So that filing of the Form 211 is done by a market making firm. We have 120 firms that link into our system that make markets in one way, shape, or form through what's called the filing of that Form 15C through 15C3211. That market maker files with FINRA, kind of puts up that they understand the company and they're going to put a good quote up. They file it. FINRA gives that market maker a 30-day monopoly. In essence, that market maker has 30 days to be the sole market maker in that security. After 30 days, it becomes what's called piggyback eligible, and then any of the 119 other market making firms can come in and also post a public quote. And so what you'll find is a company, you'll have 30 days, maybe on day 31 you'll have 2, and hopefully by day 4,000 you've got a book of 20, 30, 40, 50 market makers. And as more come in the book, the spreads get tighter and liquidity increases.
Thank you. Any other questions? Please.
Question, I guess when you're trading dual listed stocks, where's the volume vis-a-vis Canada, US? For the CSE listed stocks.
I couldn't give those statistics. I would not know. But
You're getting
I
more
would.
liquidity in the States or in Canada?
No, far more in Canada.
A lot more in Canada?
Yeah, far more in Canada would be just like a general educated guess. Though, like we said, the volume can be misleading.
Yeah. So that holds true in most markets. The home market is always going to be the most liquid market in any country. We have 76 countries that have a dual listing in one way, shape, or form on our market. It's always the local market that's going to be the most liquidity. In Canada, it is a little misleading because you never know if that order originated here and it was a U.S. investor. It might get easily routed to Canada. So without that dual listing, you might not have received that order. But because of that dual listing, that order might print in Canada. So that is a little misleading in Canada.
I can sort of run with it there. There are a few names that will catch fire periodically in the United States that are listed on us, where on a given day there might be a couple million shares that you guys will do. But again, typically the trading is going to reside where the shareholders are, and the vast majority of our companies, obviously, the shareholders are principally resident in Canada.
Thanks.
Chuck, I have a question, perhaps for the OTC fellows and our Canaccord friends. What is your opinion on the regulatory framework and compliance framework of the U.S. banks on the OTC stocks in general? Because it's my experience that 99% of the banks in the U.S. as well as Canada have completely outlawed the trading of OTC stocks. So I'm very happy you're here to chat about this, but in actual fact, I see a tremendous advantage to what you've done on the QB by vetting companies and having them report and having them audited, which is fantastic. But it seems the compliance departments at the banks haven't caught up to what you guys have done. Can you guys comment on where you think we are in the process? Because it seems that many of the financial institutions, both in Canada and the US, do do not permit us to trade OTC stock.
So I can cover that if you, one
Yeah.
of you guys.
I mean, I'll just,
trade OTC
yeah, I'll
stocks,
just tell you that,
You're allowed.
I mean,
I just wanna know what you guys,
okay, so just, you know, so I'm not,
Because we see something else.
so mention, some big banks in the United States, and I'll tell you if I've executed an order for them in the over-the-counter market in the recent past.
JP Morgan,
Yes.
Goldman Sachs.
Yep.
So JP Morgan is a market maker that's linked
Yeah.
on our system. So what I,
But are these pro orders or are they actually client orders?
They're client
You
orders.
know,
Both.
They're client orders?
so what you're seeing in the OTC market is actually, it's been very transformational in the last couple of years.
Right.
And in fact, our CEO is gonna be down at the SEC on Thursday, because we're continually down with the SEC. For good reasons, not bad. You know, we were the pink sheets for
Yeah.
any number of years, right? And we became OTC Markets Group in 07, 06, 05. And we've since then created QX, we've created QB. And what that has done is a couple things. It's made pink really bad. And what you're starting to see is large broker-dealers and large banks become so risk adverse that they are prohibiting the trading and the customization of pink securities. So this summer we saw UBS and Credit Suisse, large banks, issue a note to their clients saying, unless securities meet these certain rules and restrictions, most of them are the penny stock rules in the US, we're not going to trade and hold those securities on behalf of our customers. At the same time, the SEC took QB and QX and deemed them what's called established public markets. So it separated QB and QX further to the good and took pink way further to the bad. And so what we're seeing at OTC Markets was actually a good business opportunity, is that most of the firms you're thinking of, Goldman Sachs, JP Morgan, Credit Suisse, UBS, are all now paying us, so we have a market data business and we can make some money off of this, are paying us for our compliance files, which they feed into their systems, which say what's a pink security, what's a penny stock, versus what's a QB and a QX security. And so they will kick out and make it much more difficult, and are making it much more difficult, to trade securities that are held in pink. And so I think that's what you're seeing. And they're coming up to speed more with the verification of the compliance standards of QX and QB and getting comfortable with that. Now that being said, Radio Shack goes bankrupt. Where does it go? It goes to OTC Pink. When American Airlines went bankrupt, where does it go? It went to OTC Pink. And you need,
I can promise you the banks are trading American Airlines and are trading Radio Shack.
And you
So-
need a place to trade those while those companies are going through what they're going through.
Right.
And Pink is the place. And every single one of them, Fannie and Freddie are on QB, and you should look at the trading of Fannie and Freddie, right? So it's not really prohibited.
I think, you know, too, your question was, there was a moment and it's just really, the tide's really just changing now, but you know, institutional money managers and asset managers, asset allocators, hedge funds, not so much, because they have more flexibility in their mandates. But plain vanilla guys, still to this day, some of them can't hold a security which is traded over the counter. It used to be on the pink sheets. It's slowly starting to turn. You know, they're starting to understand that there's instances where just because something isn't on NASDAQ or New York Stock Exchange doesn't mean that it's a worthless stock or a supremely risky security. So that's starting to change a little bit. We've seen it with clients from the plain vanilla money managers, the institutional money managers. You know, however, I know some of the Canadian banks, they do shy away still from letting their clients trade over-the-counter stocks. Just means usually a little bit more of a process for them. But all the U.S. banks are trading this stuff daily. Yeah.
Thank you. Thanks. Again, probably the next round of questions could be asked around the bar maybe. So I'll ask Scott to wrap it up. And again, thanks to the panelists, all of whom had real good contributions and good things to say. And thank you all for being here.
Thank you. Thank you, everybody. Merci tout le monde pour la venue ce soir. I think we all found it very engaging. We want to have a drink, talk some more, hand out some business cards, and hopefully have these guys back again, because this process, you know, doesn't happen overnight, and I'm sure that I come back in warmer weather. So, one last thing I did want to mention is that if anybody's going to PDAC, we are hosting a lunch on the Tuesday, 11:30. I have a copy of the invite here. I'll leave it at the front desk. All you need to do is register. If you don't do it, you forget, just give me a call and I'll email it over to you. So again, to the panel, thank you very much, everybody. Much appreciated, especially you guys coming up from New York, from Toronto. Chuck, Richard, of course, and Steve. Great event, and let's have a drink.